Know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at the slippery old black gold crude oil right now. Here's where we were just the other day. Now, these are all numbers. They don't make any difference whether it's wheat or whether it's crude oil. They're all the same. The markets don't know. But what we're going to look at is just the old ABCDs. They don't work all the time, but they work some of the time. There's one that doesn't quite work. There's another one that does come in right near the exact low, because you can see how this lines up. And if you move the high to low, you'll see that it stops almost exactamundo at the old 1.618, and there it is right there. See that low? And then it rallies straight up, $6,000. Got a little 382 here, and look where we are now, boys and girls. Pay really close attention, because the big daddy rabbit's ready to play ball. There's our low here. We rallied 6,000, and look what we've had happen today. We've got a $2,000 setup coming up. There's your 382 at 75.24. That is 20 ticks from where we are right now. Now, the rules say that you buy the doggone thing there at, let's say, 75.28. Let's give it a few pennies anyway. Or 75.30, you're going to buy it there, and you're going to have to risk 60 points. So you're going to have to risk $600 because it's a big one. Now, what we're going to do now is I've been sitting here with my friend Paul. We've been watching this for quite some time. All we're going to do now is we're going to go down to a 2-minute chart and see if we can validate what we're looking at here. So I'll move this over. There's our action today. Now, I'm going to take the AI program off of it because we're not going to use that in our trading. Just get rid of that and move it out of the way here. Okay, here's what we want to do. We're going to get back to what we know, which is numbers. There's your 382 pattern right here. You measure the A, B, C, D pattern. It comes to right here. You can see the low so far has been 75.39. This is the one we'd like to see. This is the actual 382 number is right here. Now, is it going to get there or not? I don't know, but that's where we want to play ball. We want to play ball at 75.28, not at 75.45. We don't want to give them that. So we're just going to look at it right now. We're going to blow it up a little bit more. And I know this is micro trading, folks, but this is how you can use this stuff for, getting in without risking an arm and a leg. We only risk a contract on wheat is $25,000. We're only risking $200 on 25,000. Gee, that's a very small amount. But look, there's our number right here. So we've already hit the first 618 right here, but this is the 382. This is where the game's played, right there. We're going to put it right there. Might do it, might not. And of course, we have Stan coming up, but there's the number. We're going to be buying at 75.28 is our buy. That's 20 pips from where we are right now, which could easily get there without any trouble. You can see all of the ABCD patterns. We're going to do a few of them here just to show you that it's not just a mystery that we do. Well, there's your first 382 right here. This is a big, this thing doesn't draw rel. That's the problem. I got to draw it correctly. It's just so sensitive that it doesn't want to, there it is right there. A, B, C, D. See, there was your first swing right here. The market comes down, and where did it rally to? You go up to the last high, down to the next low. There's your 382 right here. And look where we're trying. We're trying to buy here, right here, at 28 is our buy. There's the 1.618, the whole thing. Our stop is right below here. But could it get there? Could it get there? Boys and girls, stay with me, because as you can see, we could easily get there, and there's where our order is setting right there at 28. That's what we're looking at right now. It might not get there, but that's not bad for looking at something that's trading for $75,000, and you're going to try to trade it with a $400 stop. That's what you're trying to do when you look at that. Remember this. On the daily, we had that big double bottom down in here. We said it had a really strong positive for 3 days, which it did do. And now what we're trying to do is have this correction right here come right down to a 382. Now, let's go back and play the devil's advocate for just a moment, okay? Let's say we did the same thing when this happened, all right? What you do is you go back, get your high, the low, and you watch for your 382 retracement. There it was, right there. There was your 382 retracement. Folks, that was a $2,000 move right there, just that little bit. So even though it might not get there, and it's getting pretty close, we don't know. All we're doing is trying to keep our losses as small as possible using a tiny bit of mathematics and also praying the rosary several times a day, which I, in fact, do. My favorites are, of course, the mystery, please help me here on this one. The agony in the garden, what is mystery of the five mysteries? These are memory lapse. Sorry, it'll come to me in a minute, and I'll do it. Anyway, that's the one I use. I use the which of the mysteries am I talking? The five sorrowful mysteries. There's 4 different mysteries you can use. I use the 5 sorrowful ones because those are the ones that my mother taught me to do and my grandmother taught me to do. But this is what we're looking at this point right here. I hope it works, but if it doesn't, there'll be another one coming around the bend without any trouble. So let's just remind ourselves of that. Now we had a quest to talk about natural gas here. Just give me a second here. And here is natural gas. We had a big gap up, and now we're coming down hard. I haven't looked at this at all today, folks, because I've been focusing on stocks and some of the other things that we've been talking about in the newsletter. But this was the big gap up here on Sunday night. It is right there. Okay, now we're going to verify those numbers just to see if they still work. There's your high. There's your low. There's your exact 61% return. Oh, I hit the wrong number. I think it's exact. Hold on. There's your high right there. There's your low. Oh, it misses the 618 retracement. That's of this whole move down by, oh my gosh, less than $50. And look, we're breaking down hard right now. We got a little place to teach something, folks. This is a 60-minute chart. Now, you have a big move down, and what's our first rule on a big move like this down? We want to watch for a 382. So what we're going to do now is we're going to go down to an 8-minute. And guess what? Hello, operator. What do you think that is? Johnny, put the placard down. Everybody can see it, for heaven's sakes. Hold on a second. There's your high. There's your low. Johnny, you were wrong, buddy. Is the 50%. 382 came in at 21.14. It went $50 higher to 21.15, and now it's down $900. Let's just carry that theme a little bit further. We have another big move down. Let's try to find another 382 off of the previous high, and we draw that one in, and we miss this one by less than $50. It makes a lower low. So what do you do when you do that? You recalculate the 382. You go back to your last high right here, and you put it in, and lo and behold, now you can put the placard up, Johnny, because there's your secondary 382, and now we're starting to move down pretty strongly, and we're getting close to some pretty serious support here for the natural gas as we speak. Let's just blow this up, and we'll take a quick look. Yes, we are there. That's it. There's a beautiful butterfly pattern. We're going to draw it in right now, only it's a 3 drive, not a butterfly. Let's get it up here. Stay tuned. We'll be right back. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to take a look at the gold market. This was actual things that Paul and I were looking at today. Remember, we have a bullish bias in gold because we exceeded the 78% level. We had the first 382 move right here. And so we were looking this morning for a 382 coming in. And you'll draw this in, you'll see we were looking for the 382 to come in here right around 2540. And as you can see here, we made a perfect ABCD there at 2540. Now, we'll walk through the actual trading sequence. There's your 2540. Okay, from 2540, the market rallied up $14. Right there, $1,400. We're going to move that over, and so we're going to look at this. You can see the market came up, and where did it stop? Now remember, if you're risking $400 and you make 14, you ought to put your at least you make a few bucks, which in fact what we did. But we made a lower low here, then we rallied up, and then we made a higher low right here. This was the real good trade that we were able to snag off, and we'll get rid of it to show you. There's the low. Then you come up and you make another higher high. So that gives you an ABCD, and you'll never guess where it stops, folks. There's your low right there. And there's your 61% retracement comes right in here at 53. We went a little bit higher, but that was the ABCD. It was also the 1.27 of that move right there, right on the flat out perfect money of 56. If you had an order setting in there at 55, this came down, made you $900. Now it's rallying back, and there's nothing bearish about this chart, folks. Each one of these pullbacks has been pretty bullish, and it looks like gold wants to make another high up into this level. I really believe that it's going to. Remember on the daily chart, we went to that 1270. Let's just draw it up here so you can see it. There was that 1271. There's our big target up here that we're waiting for, which is 26.25. That's only $70. That's like this swing right here. See this swing right there? Let's just get it out of the way. You took that swing right there. There it is right there, and extend it. It's going to get you right up to that level right up in here, which is 26, right around 26.25, 26.24 is what it looks like. It doesn't take very much to get there. Once you start clearing these levels, this is a piece of cake to make that. Let's double check silver because that's even more bullish. And we'll get up here and take a quick look at that because silver looks like it's got 31 written all over it. And here's silver. We'll get the old daily chart up on silver, and then we'll move down to the smaller time frame so that we can see it together. There it is. There it is. 31.40. It's about as simple as you can get. We've had this on the watch list since Hector was a pup, and that dog's 9 years old. So we got to watch it. Okay, there's 1, 2, 3. There's a perfect 1, 3, 5 symmetrical triangle coming out of Roy Longstreet and his son Bill. That's perfect symmetry. You can see that. We've already done the time frame. There's where we are now. We've taken out the highs of yesterday by... No, we have not. We've almost taken the highs out, but we haven't done it now. Let's see, 51 to 50. Well, it hasn't taken out the high. This is 51 and change, and we've only been to, 30 and change, and we've only been to 29.98. We're a penny or two away from it. We've actually hit $30.07, or only 17 cents off the high. Moving down to the smaller time frame, you'll see, find something bearish about this pattern, folks, and call me and let me know, because there's nothing bearish about this damn thing. Look at, there's the low here 2 days ago. Get the placard ready, Johnny. Looks like we got another one lined up for you, buddy. Right on the money. 382. What do you do at 382? Well, you buy it there and you made $1,500. How much did you have to risk? Very little. Look at this. You take out the low of the previous day on the 26th by 4 cents at 29.70, and here it is getting ready to go popping through. Folks, this looks like it has every earmark to get to that 31.40. There's 31.10. If we draw it like this, okay, put this in here, there, and there's our number right here. We're looking at, on the daily, this is 31.16, but on the daily, that number is 31.42. 31.42 is the actual. Well, 31.20, 31.42. That's what it should get to if we're looking at it. Now, if you want a really good demonstration about how this all works with Elliott Wave, please drop me a private telephone call. My new number is 525-555-5555. Press number 1, and I'll send you my Elliott Wave description, because I know less about Elliott Wave than anybody else. So all I use is A, B, C, D, a tiny bit of Fibonacci, and that's all I use. Sometimes they work, sometimes they don't, but that's what we're absolutely looking at. So that's basically what I'm trying to give you some idea of what we're seeing here. But I really think we got $1.50 to go here. We might have a little bit of trouble here at 30.50 in the silver, but boy, it certainly looked like it is all the things. I mean, all these little, look at the 382 here, 382 here. This thing's moving higher, folks. Much different than here. You see how it's correcting all the way? This market's telling you that it wants to go higher. It won't back off. This is where it's going. So don't know what it means, but it looks pretty good. Now let's take a quick look here at the British pound, because something happened in the British pound today that we talk about all the time. And sometimes if you follow what we do, you'll find out this is what we're looking. Let's get up here to the daily first, and we'll look at the British pound. I had several people ask about it, but here's where we are, and we're back there again. So here's where we are. Look at the number here, folks. See where we're trading right now, 332247. There's where we are. Look at this little move this morning. I want to show you what happened, because this happened to be real early in the morning. I'm going to get the 4-minute chart out. There it is. Oh, just as perfect. I love this. Anyway, this is what I was watching last night. And this was, you can see here, this was 5 o'clock in the morning my time. There was a perfect 382. The market came down. It only made like, 40, 50 points, about $300. And then it started to go up, and look what it's doing now. It's taking out these highs. But where are we on the daily? Pay real close in here, folks, because we're at the flat out. See this 1.618 number? You know how important that is, right? This is where we are right now. This is giving you a great chance to do what? Sell the British pound. Get it up here. Hold on. This is not going to cost you very much. Look at this. Just make a new high on the day. Where would you put your stop? Okay, let's just do something crazy. There's the number you want to be selling at right there, right where it's trading now, 132,446. All you do is you take this, multiply it by 1.618, move it up here like this. You're selling it at 44, your stop at 74, so your stop would be at 80. So you're risking 80 points. 80 points times, $1.60 a point. Hold on, $1.60. So you're risking Is that right? No, it's only 325 a point. Let me get this straight now. 50.25. Yeah, one full point from 324, 334. So your stop would be, let's get it right here. We're going to put it in right here at 132. I shouldn't be doing this on a trading day. Shut the front door. 1.3274. Okay, the distance between right here and right there is 30 pips. It's $6.25 a pip. So it's going to be about $320 is going to be your risk. So you sell it there, buy it there if you get stopped out, and then send your complaint in to me, and I'll be happy to say an extra prayer for you with my rosary, but that's the extent of my responsibility. Let's see how it works. Now, we got a real treat for you folks. The wizard himself from Virginia, Mr. Stan Harley, the Harley Stock Market Letter, is in the house.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we have Stan Harley in the house today. And Stan, I hate to tell you this, buddy, but you're under big time pressure today because sitting next to me is one of my old trading buddies from Chicago Mercantile Exchange. And I told him, I said, I got an old buddy coming on here to watch him. And he said, well, I'd really like to see what this guy's got to say because you said a lot about him. So I hate to put you under a lot of pressure, but all we want to know is which are going to be the high days, which are going to be the low days, and how much we should risk on every trade. Can you do that for us for today?
Well, I've got some strong advice.
Yes.
If you want to make money, you put on the maximum contracts you possibly can, and don't be wrong.
I got it. He's already.
Is there anything else to know?
Down. Yes. Okay.
Okay. I'm glad
I think
he's
heard that tune before because he's known me 40 years. Go ahead, buddy. Show us what you got.
I don't know. What do you expect from Tucson, Arizona, right?
Yes. He's got a son that goes to the University of Arizona here. That's why he's visiting.
Ah, well, that's where my son went. Great school.
I know you did. I know that. Fire away,
Well,
buddy.
let's see if we can talk about those highs and lows.
Okay.
I'll give you my best guesstimate. How about that?
That's perfect for me.
Let's start out looking at the weekly data. And this is something that you and I have talked a lot about in the past, but I want to just review it for perhaps some of the newer viewers or maybe some of the older viewers that may not recall. I do a lot of work, as you know, with Fibonacci and Lucas relationships. And I find Lucas numbers by far and away are exceptionally powerful tools for forecasting pivot points in the future. Generally speaking, they seem to work best defining horizontal moves, i.e. high to high or low to low, or their doubles, or their 1/2 counts. Fibonacci numbers tend to work better in defining diagonal moves, like moves from high to low or low to high, in either the fib number themselves or the ×2 multiple or the 1/2 component. But what I've done here is this is a weekly chart going back more than 40 years. And if we just hone in on this very important high in 2000 and look left and look right of that date, you can see that certainly to the right of that time, all of the major highs, 100% of them, occurred coincidentally with this Lucas number multiplied by 2. And just for convenience sake, I put a little table in the upper left-hand corner. The first column is the Lucas number series from 47 to 322. The second column, I've doubled those numbers. And as you can see from the 2000 high and 2007 high, we were approximately 398 weeks, Lucas 199 times 2. We did that again into the 2015 high. And then into the 2020 high, we were within 2 weeks of being exactly Lucas 123 times 2. And the 2022 high, close to 47 times 2. And if the pattern continues, and I put the word if in italics, but if it continues, the inference is we should be looking towards the week of November 5th to 12th for a potential high of importance. Now, does it necessarily have to continue doing this? No, of course not. But it's certainly been working for 40 years. Is it going to continue to work through the end of this year? I think it will. Based on this and a lot of other things I have under my microscope. Anything going on that week that you're aware of?
November of this year? Let me get back to you on that, okay? I'm not quite sure. Okay. I don't follow any of that stuff, hardly at all. Unfortunately, it's forced upon me. Stan, I don't know about you, but I have 179 homes in our subdivision here in the foothills, and only 3 houses have, political signs. There's 2 Democrat and 1 Republican sign out of all of the houses, and usually it's a third of the houses have their signs up. I don't know what the percentage is, but we only have 3 people that are even bringing it up, which is you seeing that at all? Are you seeing many advertising signs in your neighborhood?
Not yet. But okay. As we get closer to November 5th, I'm sure more and more will start popping up on all the street corners.
Okay. Let's
look at the daily data.
Let's go to data. Yeah, forget the ups and downs of the whatever we see on TV.
Stuff. Let's focus in a little bit more closer detail. This is what's been going on, and this is a chart that I've shown you weeks and weeks and months. This is the latest update. What I have found is the dominant troughing function on the daily chart is characterized by a cycle that nominally spans about 53 to 54 trading days. There have been 2 or 3 times this has expanded by 1.5. Cycles do that. They are not always a regular clock. They tend to move around, they expand, they contract. Sometimes they skip a beat, only later to recur. But heck, it is what it is. Anyway, long story short, the 53, 54-day cycle made its mark within 1 day of what I had calculated. It occurred on August the 5th. And we're heading up from here.
Okay, very nice. We sure nailed that August 5th one right on the money, buddy. That was a beauty. Dow was down 1,340 points that day.
It was. And the market declined, depending on the index, but nominally about 10%. Some of the indices a little less, some a little more. But an intermediate decline into what I call a primary cycle low, and these are standout lows on the weekly chart, typically are on the order of about 10%. And we got it, and we got it right within the time span. One other little tidbit is these primary cycles tend to span nominally about 161 trading days. Sometimes a little less, sometimes a little more. 161 is the most frequent occurrence. That happens to be 1/2 of the Lucas number 322. And that's no accident that is the defining function. And what is also interesting is if you take 161 and you divide by 4, why? Because each primary cycle is usually composed of 4 trading cycles. 161 divided by 4 is 40 and a fraction. So each trading cycle nominally spans about 40 trading days or 2 months. Now, is it exactly 40 trading days? No, it's a little less, a little more. But over the long haul, and I wrote a paper on this for the Foundation for the Study of Cycles, the nominal trading cycle span is right at 40 trading days. And you can see 4 clear trading cycles in the primary cycle that just recently completed. Now we are in the first trading cycle heading higher. And I've got a little date marked up here, and we'll get more into that here shortly.
Okay, I think we got a break coming up here, my friend. Let's double check. No, we've got 33 seconds left, but since we got a second, it's over now.
There we go. Understood.
Stan Harley, stay tuned, folks. We'll be right back with more.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information in one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Stan, I got a question. Paul has a question for you. He's familiar with Lucas numbers. He's an engineer. Do you ever use it on smaller time frames like a 4-hour or 60-minute charts to see on highs and lows and stuff like that? Do you ever look at those?
Absolutely, I do. I trade the ES, and I look at the 2-hour chart and do a lot of analysis on that, and I find those numbers to show up on that time period as well. They work on all markets, all time frames, but what one has to do is look at the chart, look at the patterns, and see what numbers seem to pop up the most. And once you do that, you'll have a pretty good feel for things.
Okay. We have a question from Jeff, is on the line here from New Jersey. Jeff, are you there?
Yes, thank you, Larry. Stan, I have just a simple question, just asking you to ask you. So from previous shows, I think you had said that there was going to be a dip in October, maybe mid-October, and then we're going to get a multi-year high in early November. So does that mean we're going to get a very sharp, accelerated, high slope move from middle of October to early November?
Well, a good question, and I'm going to show some charts on that here in just a moment. But I think the primary cycle low that we saw on August the 5th probably is going to be the price low for the move. I could see this market potentially trending sideways, modestly sideways, between now and mid-October. But just to back up a bit, I think the lows are probably in the rearview mirror, and I think we are in an area of time in which the upside risk is more likely than any downside. And yes, I do think we're going to head higher and probably substantially higher into the early November timeframe.
Okay, so it sounds like don't look too hard for a dip in October.
I would back off from that. I think we'll get a trading cycle low in mid-October, but I do not think prices will be lower than what you already saw on August the 5th. That's my thinking at this point in time. So my views have changed just a skosh from when I was last on the air.
Okay, fair enough.
Okay, great. Well, thank you very much, Dan.
Okay. Jeff, thanks for calling in. Go ahead. Please continue, Stan.
Absolutely. What I thought I'd do is just quickly take a look at where we've been, and I'm going to go into where we are going. This is the S&P through just before we came on the air, and from the October low of last year through the early August low of this year, each of the major lows was characterized by a significant Fibonacci ratio, 0.236, 382, 618, 764, And within, I think, one trading day, those all worked out pristinely in my regression modeling. You don't always see it that clean. Now, where are we going? Well, anyone complaining that this market advance is just being characterized by the Magnificent Seven, I think, is missing something quite important here. The New York Composite Index, which is the broadest measure of market activity on the New York Stock Exchange, yesterday was at an all-time high. All-time high. So it's not just being pushed aloft by 7 stocks. All stocks in the stock market are part of this broad-based advance. And then let's take a look at an important technical indicator that a lot of technicians focus on, the advanced decline line. Yesterday, all-time high in the New York advanced decline line. So we've got a powerful broad market advance underway right now.
Stan, how do you explain the fact that you have the Dow Jones, the Russell, the S&P, and the NASDAQ, none have made new highs, and yet the other index, which is 1,600 issues, the New York Stock Exchange Index, has exploded to new highs. Shouldn't some of those indices be making new highs also?
Well, the NASDAQ and the S&P 500 are lagging a bit. New York Composite, all-time high. Here's a chart of the Dow Jones Industrials. Larry, yesterday, it made an all-time high.
Yeah, but the futures didn't. They missed it by several hundred points.
Okay. Well,
but the actual Dow Jones made a new high yesterday.
There's the chart on the screen.
I see it. Wow. I don't look at the index itself. Boy, that's really good information, Stan. Thank you very much. I like that. I have to double check that.
And also, take a look at let's spend a moment here on this chart. I think what is developing here is what W.D. Gann many years ago referred to his rule of 4. What is the rule of 4? He noted that when an index or a stock or a commodity moved up to overhead resistance and it failed 3 times to break through, a lot of people would say, triple top, triple top. Well, Mr. Gann said, let's watch the 4th attempt. And if on the 4th attempt, that stock or index or commodity fails to break through, it reverses sharply to the downside and falls precipitously. On the other hand, if it breaks through on the 4th attempt to the upside, we tend to see a swift and very volatile move on the upside. And I believe we are in the early stages of that right now. And as I said, and by the way, the Dow Jones Industrials Cash Index yesterday made a new all-time high.
Wow, I don't look at the index itself, but boy, that's really good information, Stan. Thank you so much for just bringing that to my attention. I got a lot of work to do on that. Please continue, my friend.
One final chart, Larry, to show.
No, you take your time. You get the same. You get the same big check as you do first class or second class. Makes no difference.
I appreciate that, Larry. You are all man and a mile wide. Take a look at this chart of the 80 trading day cycle. Something I've showed here on the air with you in the past. The dominant lows have been coming in around 53 to 54 trading days, but the dominant highs have been coming in around 80 trading days, which is 2 times that 40 trading day cycle that I talked about earlier. What I've got here on the top, of course, is the chart. And there have been a couple of times the cycle has skipped a beat and then picked it up on the second beat, i.e. it expanded by 2.0. And what I've done here in the spreadsheet is I've done what's called a regression analysis, where I put all of the dates in. These numbers under the Y and Y equals MX plus B merely represent row numbers in my spreadsheet for easily counting. And as you can see, the analysis says the cycle length is 80 trading days. And there's a standard deviation of 3.29 trading days. And I did this analysis several months ago. The analysis was suggesting that the time period right around July 18th should see a high in this cycle. What happened? The S&P topped out on July 16. The Dow peaked on July 18. And I haven't updated this thing. I did this about 3 or 4 months ago. When is the next recurrence in this pattern due? Ideally, right around November the 8th.
Wow.
So what's going on that week? What do I think is likely to occur? Well, I know there's an election, but I don't think the election is going to be the major factor. I have a feeling the Fed meeting, we have a 2-day Fed meeting that week. My guess, I hear the music. I think we're going to rally strong at the end of that day.
Stay with us, buddy. We got 2 minutes to go. We'll be right back.
All righty, Rick.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Stan Harley is on the line. Stan, tell the folks how they can reach you and any other comments you'd like to make right now.
Absolutely. By the way, I was just during the break, I was watching that promo piece that had a picture of you. You are one handsome dude. Holy jeez.
Yeah, that was taken 39 years ago, Stan. It's pretty much up to date. Haven't changed much.
I can tell. I would just want to add one more thing here on this final chart. This 80-day cycle chart. The next recurrence is due in the vicinity of November the 8th with a standard deviation of about 3 trading days. That week, of course, we have the election. I actually don't think the market's going to turn on the election. We have a 2-day Fed meeting that follows. And my guess, this is just a guess, the Fed does something with that 2-day Fed meeting that the market really likes. And maybe we get a whopper of a rally coming out of that. And then the following day, everybody looks around and says, you know something, I think prices might be a little too high here. And maybe that's the trigger point that knocks this thing down. We'll see. We got lots of time to flesh that out. But the technical cycle work, the Fibonacci, the Lucas counts, everything that I'm tracking is really honing in on that week, Larry. So we'll see. I might change my views, but right now that looks that week looks very, very compelling for a major high.
Okay, buddy. Listen, thanks for joining us, and stay tuned tomorrow, folks. We got Grace Morris of Astroeconomics on the line, and she's always a lot of fun. Stan, thanks you so much for what you bring to us each time you have us on, but really appreciate it, buddy.
Absolutely. My pleasure, Larry.
Okay. See you on tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.